Okay, good afternoon, everyone. So welcome back to our session for today. We had a 1 week layoff. I hope you still recall the lessons that we have got under that we have gone through so far. If not, let's just have a quick review. This lesson is all about financial statements and ratio analysis. So we're looking at this financial statements of this company. Sorry, this is Microdrive. And during the last session, we looked at some of the ways to analyze the performance of the firm. And we looked at the common size statement, otherwise known as vertical analysis, and also the horizontal analysis. So what's the difference between these two? For the vertical analysis, we look at the income statement and the balance sheet and reference it to a particular account. For the income statement, we reference it with respect to sales, which means that everything is benchmarked on sales. So for example, what will appear is that sales will have 100% or 1, and the rest will be a fraction of 100%. So in this case, if we're going to analyze Microdrive in 2021, for every 100 pesos of sales, it earned 3 pesos and 60 centavos. So that's how you interpret these percentages or these proportions. Total operating cost accounted for around 93 pesos. So for every 100 pesos of sales, you had the company incurred 92 pesos and 86 centavos of operating costs. Okay, so the bottom line was for every peso, it earned 3.60 centavos. Okay, for every 1 peso or for every 100 pesos, it earned 3 pesos and 60 centavos. To answer the question, is it good performance or not? We said that there are two things that we need to do. We cannot just evaluate this or analyze this or interpret this just based on this solitary figure, this one figure. 3.6, 3 pesos and 60 centavos for every 100 pesos of sales. You can't really say not bad or not good, because we have to benchmark that. And there are two things with which we can benchmark the performance of the firm. Either benchmark it against competitors. Okay, so is this 3.6 lower or higher than the direct competitor? If this is, if 3.6, 3 pesos and 60 centavos or 3.6% is, let's say, much higher than the performance of the direct competitor, then we can say that the company is performing well. Or relative to the industry, if we have the average industry profit margin, then we can make certain conclusions or certain inferences about the performance of the firm. So it's always in the context of its of the industry average or the direct competitor. It's never taken in isolation. All we can say that for every 100 pesos of sales, the company earned or had profits of 3 pesos and 60 centavos. Aside from that, guys, we cannot do some comparative analysis unless we compare it against the direct competitors or the industry average. Okay, if we have those figures, for example, for the industry average, let's say the industry average is 8%. So we can say that the company lags in comparison to the industry average. Talong-talo siya ng industry. Okay, and if the industry average is just 1%, so we can say that the company fares better than the industry itself or the direct competitor. Now, aside from comparing it with the direct competitor, we can also use benchmarking with time. When you say benchmarking with time, you also compare it with the previous years. So for example, The profit margin in 2020 was negative 1.63%, or it means that for every 100 pesos of sales, the company was losing 1 peso and 63 centavos. So the company was, in fact, uh, the total costs were greater than the total revenues. That's why there was a loss of 1.63. So is that good or bad? That that in itself could be interpreted as bad because it's a loss. It's something that were, as I mentioned a while ago, the revenues were exceeded by the costs, and we don't want that for a company with that kind of a performance. Okay, so aside from that, we can also compare that, as I mentioned a while ago, with the other years. So we can say that 2021 was a better year compared to 2020 because in 2020 the profit margin was a loss of 1.63%, while in 2021 the company was able to recover and generated positive revenues, positive profit margin of 3.6%. Okay, and then we can compare that with the 2019 and say that compared to 2019, 2021 was a better figure. Okay, this actually can be seen in what we call the horizontal analysis. So for horizontal analysis, what we do is to compare between years. So we have between two periods, I mean. So we have this on column L, we have 2019 to 2020, which means that we're comparing 2020 and 2019. We're computing for the growth rate and also 2020 and 2021. So how did we get 70%? We just get the ratio of the current year divided by the previous year. So between 2020 and 2019, the current year is 2020. So we divide the sales of 2020 with the sales of 2021. Okay, to get 70%. So which means that revenues increased by 70%. So from 2019 to 2020, it increased by 70%. And then on the other hand, from 2020 to 21, it increased by around 21%. So the increase between these two periods, the increase in 2019 to 2020 was greater than that of 2020-21. Okay, so we compare, and then we see if there was a increase in those in the accounts that's being compared between periods. So for example, in terms of EBIT, okay, EBIT between 2019 and 2020 went down. As you can see the absolute figures here, from 209,000 or 209 million, because these are in thousands, it went down to 17 million. So there was a drop of 91% or 92%. On the other hand, between 2020 and 2021, there was a huge increase in terms of EBIT. So that's why we say that there's a 2,782% or 2.7 times increase in EBIT from 2020 to 2021. Okay, and so on. So we have discussed this, how to interpret or how to compare or analyze the financial performance of a firm using vertical analysis and horizontal analysis. Now you need to know this because your final project is a ratio analysis. It will be a group project, and then most probably I'll discuss it on Thursday as to the requirements so that you can start already with your group mates. Also, on next week, next Thursday, we'll have our second quiz. It will be face-to-face. Our quiz will be conducted in class. All right. Okay, so for the balance sheet, we said that everything is expressed in terms of total assets or total liabilities and equity. So since total assets is the same as total liabilities and equity, you can actually just peg it to one of these. Okay. And then we can analyze this based on the relative proportion of the assets to total assets. For example, we can see here that the company had a huge investment in inventories, okay, 48%, 49% for the total assets. Net fixed assets was only 24%. Now, again, is this good or bad? Okay, we cannot answer that. We can only say that inventories made up 48%. For every 100 pesos of total assets, around 49 pesos was inventories. Okay, you can only interpret this, or you can only assess this based on benchmarking it against the industry, just like the income statement or the direct competitors. So let's suppose this is a company where machineries are very important, and then that the net fixed assets of the company, which accounts for 23.79% of the total assets. Okay, and if we compare that with the industry players, which has, let's say, 40% net fixed assets, maybe that can lead us to analyze or to ask questions about the percentage of proportion of the net fixed assets. Is the company lacking in terms of investing in fixed assets? So that can be a critical question, because if the other players in the industry are really investing in fixed assets, then the question is, why isn't the company doing such? Or how about inventories, 48, 49%? Could it be that the company is holding on to slow moving or non-moving items? That's why they have a huge industry level. Is it possible that pwede kaya na that the company is holding on to slow moving or non-moving inventories na doon pa rin? So because that could mean obsolescence for the company. So what's the nature of the inventories? Are these raw materials? Are these work in process? Are these finished goods? Okay, it can also indicate that the company has the processing, the manufacturing process of the company is quite slow. That could be indicative of that. So if it's slow, so it's very slow in terms of converting to finished goods, and then the finished goods also takes time in selling. Okay, that's why it remains as inventory for a long period of time. So we have to, as a finance practitioner, it's very important that finance looks into this. Okay, is there something wrong with this, or is this industry standard or industry average? Okay, if there's nothing wrong with that, then so be it. But it should not prevent the company from analyzing how the asset base of the company, how the company is able to manage its assets. Okay, and same thing with the liabilities and equity. Okay, is the company really highly leveraged? Because here we can see that total equity is 19%. Okay, total debt is, if we add this, okay, let me insert this one. Okay, if I add this, okay, so debt accounts for 80%, right? And equity accounts for 19%, at least for, okay, that was for 2020. But for 2021, okay, there was a marked difference, because here equity ballooned to 56%, largely due to the, okay, what happened here? There was an infusion of capital from the shareholders. From 460 common stock, it became 1680. That accounts for the large increase. 47%, no, sorry, 265% increase in terms of common stock. So 2.67 times increase. All right. While for between 2019 and 2020, there was no increase. Okay. On the other hand, debt decreased by 50%. So the company paid, okay, from 1 million, it became 500. So they retired some debt. Okay, that's why debt decreased by 50%, while equity increased by 265%. Okay, so you can see here the progression in terms of liabilities and equity. So what does this tell us? In your project, you have to look at this. You have to analyze the common size statement and the both vertical and the horizontal. Okay, so now let's go to ratio analysis. Okay, we have completed the statement of cash flows last time. So let's now go to ratio analysis. And we have here different types of ratios. Okay, so we have here L. Okay, this one, you have two measures of L, which are measures of liquidity. And then we have AM. AM stands for asset management ratios. Okay, you have several asset management ratios here. All right. I'm sorry, I think I accidentally deleted. Do you have here? Okay. Kindly check if in your file you have two additional do you have two additional ratios there? You have a accounts receivable turnover, or we call it the ARTO, and the accounts payable turnover, or APTO. Do you have this, guys? Class, do you have this? Kindly chat, please. And line 97 and 98. Do you have them? Okay, none. I'm sorry, I accidentally deleted, I think. And I also deleted this one. So next, maybe I'll just email for you to put the figures here because we need this. So I'll just invent in the meantime what these two figures are. All right. So asset management. Then we also have here this one, DR, which stands for debt ratio, PR, profitability ratios, and MV, market value ratios. Let me write that here. DR stands for debt or others call it leverage ratios. And then we have PR, which stands for profitability ratios. And then we have MV, or your market value ratios. Okay. So there are many other types of ratios, and there are many examples of liquidity, asset management. We'll just focus on this most critical ones as far as we're concerned. Okay, so we expect to finish this by Thursday, everything here. Okay, and then maybe move on to the next lesson on Tuesday. But whatever new lesson we discuss on Tuesday will not be part of the exams on Thursday. Your exams will cover only ratios. Okay, so let's continue with this one. Liquidity. So what are liquidity ratios? What do they indicate? Anyone, please? what do liquidity ratios indicate? What are they measure? What measures are they for? Anyone? Any guess? Liquidity. Okay, I think we discussed that term before, but we interpreted it in the light of cash, right? So the balance sheet is arranged according to liquidity, which means how it's arranged according to how easy a particular account is converted to cash. All right, so Shekinah here gave an answer. How fast can the company turn its assets to cash? Usually related to bankruptcy. Okay, so all right, so that's a correct definition. But for our purposes, for this case, when we look at liquidity in terms of a ratio, okay, so what we mentioned liquidity for before is its relation to how the balance sheet is arranged. Okay, and we said the balance sheet is arranged according to liquidity. By liquidity there, we mean how easy it is for a particular account to be transformed into cash. Okay, so that's what we mean by liquidity there. In this context, iba yung liquidity. You have two measures here of liquidity, which is current ratio and quick ratio. Liquidity in this sense means the capability of the firm to pay its current obligations. Okay, how capable is the company? Does the company have sufficient cash to pay its current obligations? So that's what we mean by liquidity, as distinguished from what we call solvency. So solvency is different. Okay, solvency, on the other hand, means the capability of the firm to address or to pay its long-term commitments, long-term debt. So liquidity, short-term debts; solvency, long-term debts. Okay, so first, how liquid is the firm? You have here, okay, kindly change this, make this direct competitors. Let's assume that this is a direct competitor instead of the industry average. Okay. So by the way, I think I forgot to mention a while ago, but which I did already before, that when we analyze the financial statements of a company, it is imperative that we look also at the performance of other companies in direct competitor. And that requires that we also do some research and look at the financial statements of other companies. Okay, my question dito is this. Julian, kindly share your question to everyone, please. Kindly share, please, Julian, your question to everyone. All right, so thank you. Liquidity is short-term debt. No, liquidity is not short-term debt. Liquidity is the capability of the company to address or to pay their short-term obligations. That's what we mean by liquidity. Liquidity is not the short-term debt. Liquidity is the capability of the firm to pay its current obligations. Kaya nga, this is a ratio, no? Which we'll discuss the formula in a while. On the other hand, the capability of the firm to pay off their long-term obligations is called solvency. Solvency yan, versus liquidity. Okay, did that answer your question, Julian? Julian? Okay, thank you. Good. Thank you for your question. Really appreciate the question. Okay, so clear yung clear yung definition ng liquidity. It's not current liabilities. It is the capability of the firm to pay off their current obligations when they fall due. No? So we're talking of ability to pay. All right. On the other hand, as I mentioned, if we're talking a look at talking about the long-term commitment, the long-term debts, then we're talking about solvency. Okay, so current ratio, the formula will be simply current assets divided by current liabilities. Okay, so that's a formula. Very simple. Current assets divided by the current liabilities. So we can now, let's compute for the current ratio. And the current ratio is current assets. So this is our current assets for 2021 divided by current liabilities. We have it here. Okay. All right. So it's around 2.6. Okay, let me just make this one decimal place. Okay, and then I'll copy this to the right. Okay. So we have here, again, class, when we analyze financial statements and ratios, financial ratios, we do not take it in isolation. We do not just analyze it, for example, 2.6. If we're going to analyze that, we can only say that for every 1 peso of current liabilities, okay, the company has 2.6 pesos of current assets to pay its obligations. Okay, so that's how you interpret this technically, theoretically. However, if you want to assess whether this is good or bad, then you have to go back to the 2 parameters. Number 1, benchmark against a direct competitor, benchmark against the industry. Number 2, benchmark against time. So let's take a look at benchmarking it against the direct competitor first. So 2.6 versus the direct competitor 2.7. So from here, we can say that the direct competitor has, let's say, the greater capability to pay its short-term obligations by virtue of the current ratio. Okay, just based on that, 2.7 vis-a-vis 2.6. However, a good analyst will not stop there. It will not just base it on these figures, 2.7 versus 2.6, because what it will do is to look at the nature of the accounts that are involved here. For example, current assets over current liabilities. So it will take a look at current assets, for example, and as I mentioned here a while ago, inventories account for 48% of your total assets. Okay, 1.7 million. Okay, the current liability is 1.039 million. So if you're going to compare the total current assets with this one, then we can say that the company has sufficient amount current assets. I'm not saying cash, okay, because you have to convert first inventories to cash before you can actually use inventories to pay for this one. This is really peso debt. This is not really peso cash. We're just looking at the current assets. That's why it's important to look at the nature of your current assets. Inventories account for 48.81% or 49%. Okay, take note, class, that how I'm discussing this is how I expect you to discuss in your paper. Okay, all right. Inventories, 1.7 million, accounting 48% of the total assets. Okay, so we have to have more information about this. As I mentioned a while ago, is this inventories, does this level of inventory consist of many non-moving, okay, or obsolete obsolete inventories that can no longer be sold because it's already, let's say, it's already destroyed, or it cannot be used because new technology has overtaken it. So these things. So we can only analyze this if we know the nature of the current assets. And there is where the notes to the financial statements comes in. Okay, because the notes to the financial statements allow anyone who's analyzing the financial statements to have an appreciation, more appreciation of the make of the assets. Okay, for example, here it's receivables and inventories. Usually there's a breakdown of this. So you can see, for example, the company would usually provide an aging, call it aging of receivables. So what does aging of receivables mean? It tells us how much of the receivables is due, okay, for 90 days already. How many is just 60 days due? How many is just 30 days due? Okay, how many is not yet due? Okay, so these things. Maybe, let's suppose the receivables, many of it are already overdue. So that could tell us something about the collections department of the company. Maybe it's not doing its job well. Okay, maybe it has a weak collection department, so that many of the accounts remain uncollected. Okay, so these are things that should be addressed in the analysis. Okay, we cannot just say 2.7, 2.7. Again, how do we interpret 2.6? It simply means that for every 1 peso of current liabilities, there is 2.6 pesos of current assets. Good or bad, again, we will go back in comparison to direct competitor. Here we say that the direct competitor has greater liquidity because of the higher ratio, and then also benchmark with respect to time. So there was an improvement in terms of the absolute value from 2020 to 2021. Okay. All right. So these are the things that I expect you to write about in your group paper. All right. Let me pause for a while. Okay. And by the way, for a reminder, we should look also at the nature of the current assets, because we know that current assets are arranged in order of liquidity. So, for example, inventories is not the same as cash. What if 95% of these are obsolete items? Hindi na siya mabenta. So, i-write off na lang yun. Diba? So when that's written off, let's suppose all of this. So what's left? What's left is just around 900,000, and it's not more than enough to pay off the notes payable, the accruals, the accounts payable. Okay, so that could mean problem for the company. That could mean that the company may borrow, no? May be planning to borrow to pay off its obligations, kasi it's not good to renege on the obligations of the company. Failure to pay would mean having a bad credit record, so the company might not be able to borrow anymore. Okay. All right. So let me pause for a while, guys. Any questions about these current assets? Or let me put it positively. Clear ba yung ano? Clear ba yung pag-discuss natin ng current assets, yung implications niya, and how to analyze that, benchmarking against time, against direct competitor. Okay. Okay, let's wait for your other classmates to key in their feedback, please. Okay, thank you so much. All right, so let's now go to quick ratio. Or quick ratio is also known as acid test. Another name for this is acid test. Okay. So what's the acid test ratio? Okay, acid test ratio is, as I said, more strict than the current ratio, because acid test ratio will only indicate your cash and your marketable securities divided by the current liabilities. So this means that you're only using as your divisor those that are really easily converted to cash. Okay, yung cash, syempre cash na yan. Yung marketable securities, short term lang yan, pwedeng ibenta yan sa market. Very easy to, these are highly marketable. That's why it's called marketable securities. Okay, marketable, madaling mabenta. So there are marketable securities. Okay. Plus cash to get your current liabilities. Okay, and let's take a look at, let's compute for that, is equal to. So unless walang, the company does not have any receivables, inventories, okay, it will be the same as current ratio. So it's all equal to the sum natin si cash at saka si short-term investments. Okay? These two divided by the current liabilities, which is this one. Yan. Enter. So let me go here. Copy this. So there's the formula. Okay. Acid test. And you notice that it's really less than current ratio. Okay, especially, and this will be true if there are inventories, if there are receivables, if there are prepayments. Otherwise, kung wala, then pareho lang yung current ratio tsaka quick ratio. And once again, let's interpret this. Okay, 0.08, what does that mean? For every 1 peso of current liability, the company has only what? 8 centavos of cash and marketable securities to pay their current obligations. So it did not even reach 1 peso. Hindi nga naging 0.10, hindi nga naging 10 centavos. No? Okay, unless i-round off kaya magiging 0.10 siya. So times 10 yung capability ng competitor compared to us. Times 12. Times 12 something. Ang competitor natin 1, which means for every 1 peso of current liability, our direct competitor has 1 peso also of current cash and marketable securities. So mas liquid, no? Si direct competitor. Mas kaya niyang magbayad ng current liability as they fall due. Okay. In fact, in 2019, it's the liquidity of the company was better kasi 0.12. And then it became worse. Naging 2 centavos na lang in 2020. However, it rebounded a bit, no? Naging 0.08 na lang. Naging 0.08 from 0.02. However, if we're going to compare it to our direct competitor, we pale in comparison. Ang layo, no? Ang layo ng position ng direct competitor natin. Okay, let me pause once again, class, and again pose this question. Okay, sandali lang ha. Please allow me to pause once in a while to ask. Kasi baka may mga questions, tapos baka nahihiya ng iba. Don't be ashamed to ask questions, class. Okay? We appreciate questions here. Okay, so kindly chat, please, if okay so far, yung discussion natin on liquidity based on current ratio and quick ratio. Let's wait for the others to give their feedback. Mm. 13, 14 out of 30, 33 na lang, bumaba. Kanina 35 kayo, no? Siguro na disconnect. Pero guys, wala man lang tayong 50%. Okay, sana maka 80-90% tayo na response. Kasi yes or no lang naman yun eh, di ba? It's either you understood or hindi mo klaro yung explanation ko, then I'll repeat. If you want me to repeat a particular portion. Not even half, guys, or yan, half pa lang. So let's give a few more minutes, a few more seconds, huwag naman minutes, to your classmates to key in their input, their feedback, if clear so far. Kasi kalahati pa lang nagre-respond. What happened to the other 17? Are they still here? Waiting for the others to respond. Class. Honestly, guys, unless you're not here, unless you just show your attendance and then leave, yun ang magiging dahilan, or disconnected. Pero hindi, kasi 35 pa rin. Or you stepped out for a while. Okay, so which is it? Kasi ang layo sa 80% ng ano natin. And so yung iba, guys, more than 10 are not responding. So does that mean that more than 10, 14 students? Yes, Jude.
Hello po, sir.
Okay.
Yung sa formula po ng quick ratio, yung cash plus MS over current liabilities.
Yes.
Yung MS po ba doon is yung short term?
Di ba? Na-discuss natin dati yan. Marketable securities are AKA short-term investments. No?
Okay.
Example nito yung mga treasury bills. Yung government ang nag-issue 30 days, 91 days, 180, pinakamahaba yung 360, no? Yung up to 1 year. So ang tawag sa kanila, short-term investments or marketable securities. And they're very easy to convert into cash kasi may market for them. Okay, hindi pa rin tayo nakaka 80%, guys. But anyway, okay, may question dito. Okay, sige, balikan natin yung question mo. And Yao, kindly share your question to the others. In fact, parang assignment ko yata sa inyo yan. No? Sige, babalikan natin yan. Let's just, kasi I'm keen to at least reach up to row 102. Eh medyo mahaba-haba pa to. Naabot namin kanina sa isang section. Okay, so may question dito si Yao about the horizontal analysis. Paano yung formula for negative current value and positive present value? Okay? So di ba question ko sa inyo yan? Diba? How do you do that? Ilan yung growth rate? Okay. So sige, sagutin na natin yun, no? So let's ito, no? For example to. Okay, ito, class, no? From 146 up to negative 158. So we know that the value went down. Okay? And then it went down by how many percent? Kasi if we're going to use the formula, yung ano lang, yung, di ba yung horizontal natin is the current value divided by the previous value, okay, minus 1. So anong lumalabas dito? Ito yan, di ba? 208.16%. Okay, if I convert that into percent, 208%. And it's actually equal to, di ba? Equal lang yan sa, ano ba yung long formula ng ano? Ng growth rate. Current minus previous, okay, divided by the previous. Current minus the previous divided by the previous. Okay, you get 208. Okay? Pero actually, hindi 208% yung ano, yung decrease. Hindi. Tama to, no? Yeah. This is correct. 208%. From 146, naging negative ano siya? Naging negative 158, no? So ibig sabihin, how much was the loss? Ilan yung naging loss? Ilan yung difference? By how much did ito. By how much did EBT decrease? Class, by how much? Kasi from 146, naging negative 158. So yun ang gusto natin i-measure. From 146, naging negative 158. So gaano kalaki yung yung binaba? Kung ina-number line natin yan, 146, di ba? If we draw a number line, draw a number line dito, no? So dito, this is 0. From 146 siya, 146K, naging negative ano siya? Negative 158. So ang tanong kasi, ano yung distance na to? Okay? What's that distance? And then we divide it by 146. Okay. How did you get 305, Shikaina? Thank you for that answer. Shikaina, you may unmute yourself. Okay, absolute value. Okay. All right. Tama yun, ano? So, correct. So you just take a look at the distance. Just take a look at the distance. So it's you can do this 146 minus negative 158. Okay, it's the same as negative 158 minus 146. So that's the distance between the two. Okay, baklas? Ang tinitingnan natin, ilan yung distance, no? between these two. And the distance is yung 158. Pag i-minus natin yung 146, you get negative 300 something. No? Okay, and then divided by the previous value, which is 146. That's how you get the 208.16. Okay, how about this one? 158 negative to 422. So how do we get that? Again, kunin natin distance nito, no? Ang distance nito will be 158 tapos 422 positive. So what we can do is 422 minus this one. So the difference is 581,200. No? 581,200. Right, class? And then we divide it. Ngayon, ang problema, okay, pag dinivide natin ito, okay, ang nangyayari, nagiging negative 4. Okay, di ba ito, no? Naging negative siya. No? Pero, nag-increase to di ba? 158 to 560. So, should this be negative, class? What happened to your EBT from 2020 to 2021? Was there an increase or decrease? Class. Increase. Therefore, ano dapat yung magiging ano nito? So ito may adjustment tayo. Okay, if you're coming from a positive to a negative, no need to adjust. Kasi ang lalabas ang negative talaga. But if you're coming from a negative to a positive, you need to adjust this. So we need to make this positive kasi anong nangyari? It was an increase from negative 158 naging positive 422. Right? Diba? Nag-increase siya ng 500 plus units. Okay, clear class? Oh, what's the question? Did I answer your question? So dapat ito, sorry dapat we should either type abs, no? Which means absolute, no? Absolute figure. Yan. So absolute siya. No? Ito tama to negative. Kasi you're coming from a positive to a negative. So bumaba yung value. Ito naman from a negative to a positive. Okay. All right. So I hope that answered the question. Kung paano kukunin pag may negative na ano. Walang problema from positive to negative. Ang adjustment lang yung from negative to positive. All right. So, sige, let's continue. Okay. So let's now go to some asset management ratios. These are very important ratios as regards assessing the operating performance of the firm. So una, turnover, no? Turnover. Pag sinabing turnover, guys, whatever you're turning over, yun ang ilalagay nyo as a denominator. For example, inventory turnover. So that already gives you a clue that you're dividing something kasi ratio to, and that yung inventory dapat yung denominator. Okay? Inventory turnover. So what's being turned over should be placed as a denominator. Okay, so we know, class, that what's the divisor here? It's inventory. Okay, and in fact, it should be not only inventory but average inventory. And I'll explain why. Okay, so ano yung kapartner nito? Ano yung numerator? The numerator will be cost of goods sold. Yan ang kapartner niya. Okay? Sa accounting siguro natutunan niyo yan. Yung perpetual inventory system, diba? You use the account inventory, and then pag may nababawas yung inventory, you use cost of goods, the cost of goods sold. All right, so this is the ratio. And take note, you have cost of goods sold is a period account. Ibig sabihin, for the whole period yan, for the whole year. So that's why it makes sense to get the average inventory. It does not make sense to just divide by the inventory on December 31. Yung one period, one day na inventory. In fact, if you have monthly inventory, mas maganda kung i-divide natin yung ending inventory per month so that you will have an average of the movement of inventory. Okay, for the whole year. Okay, so cost of goods sold, 1 year yan, average inventory, average for the whole year. Okay? So let's compute for this, the ITO or the inventory turnover. So asan na yung cost of goods sold natin dito sa income statement? Cost of goods sold divided by average. Average inventories, no? Here. There. No? Ito yung beginning at end ng December 31, 2021. Ito yung January 1, 2021. Beginning of 2021 or end ng 2022. Okay? So Enter. All right, I'm getting 3.86 or 3.9. Gawin ko na lang 1 decimal place. Okay, and then we can copy this to the right. All right, so you have inventory turnover 3.9. Okay, what does this mean? Okay, let's explain. What's the implication of inventory turnover? ITO, inventory turnover. So inventory turnover tells us how many times, no? So assuming that the period we're looking at is 1 year, how many times in a year, what? Okay, number 1, buy raw materials, and then convert to finished goods, and then sell. Okay, so the inventory turnover tells us how many times a company buys raw materials, converts the raw materials to finished goods, and then sell. So for our company Drive Macro, it's 3.9 times. So let's draw that so that it's clear to us. So what does this mean? So buy raw materials at the beginning of the year, convert to finished goods, sell. That's 1. Do the process again, 2. Do the process again, 3. And do the process again. Okay, so this is 3.9 times. 3.9 times the company is able to buy raw materials, convert to finished goods, sell. Same process, 3.9 times. Okay, and we said that we should not take this in isolation, 3.9. Okay ba to? Well, you have to compare that. Our direct competitor does this 6.1 times. So is the company performing better than the direct competitor? The answer is no. Why no? Because if you take a look at the performance of the firm, okay, where's my draw? Let's take a look at the performance of the direct competitor. So this is 1 year. How is the direct competitor faring? 6.1 times it, diba? So 1, 2, 3, 4, 5, 6, and may konti pang 0.1. No? So this is actually the velocity. The velocity of how fast the firm buys raw materials, convert to finished goods, and then sell. 3.1 times, 3.9 times for microdrive, 6.1 times for the competitor. Now tell me, which is the better performer? Definitely the company that's able to sell frequently. Huh? Yung frequency yung velocity ng pagbenta nila. Mas okay yon in general. Kasi yung si microdrive 3.9 times lang. Yung direct competitor niya 6.1 times. Okay? So we can see that as far as the ITO is concerned, the higher the ITO, the better. Okay, the higher the velocity, turning over your inventory, the better. It means that you can produce more faster, you can sell faster. Okay, produce, sell faster. That's why you're able to do it 6.1 times a year, while Drive microdrive is only able to do it 3.9 times. Okay, again, pause for a while, class. Again, my question is the discussion of ITO clear? Clear ba na this measures how many times a year we buy raw materials, convert to finished goods, sell? And it also tells us the velocity of the production, and that the higher the The higher the ITO, the better. Okay, good. All right. Thank you so much for your responses. That's good. I appreciate that. All right. So we can see that based on the ratios, the competitor, okay, outperforms microdrive in terms of inventory turnover. Okay. So let's now go to the next one, ARTO, accounts receivable turnover. Okay, so we know already that the denominator should be average receivables, no? Kasi yun ang tine-turn over natin. Okay, so let's write the formula first. So this is average receivables. Okay, average receivables. And what do you think is the partner? Ano yung partner nitong receivables? Ano yung numerator natin? Anyone, please? What should be our numerator? Okay, let me see. ITO, okay. Thank you for answering, Julian. Pero it's not ITO. Ano yung partner ni ni receivables sa Arto? Saan ka ba makakapag-generate ng receivables? Saan related sa receivables? Siyempre sa assets. Okay. Thank you, Mark. Yeah. Thank you, Jude. It's sales. Okay. So ang kapartner ni receivables sa Arto is sales. Okay. And you guess what, guys? Siyempre, alam natin that the higher this is, the better kasi sales ang inaano nito, di ba? Sales over average receivables. Okay, so once again, by the way, ito class, no? Yung 2019 na figures natin, kulang siya, no? Kasi wala tayong 2018 na figures. But still, linagay pa rin natin, no? So inassume na rin natin na here for 2019, we're using the end figure, yung 2019 ending mismo. Kasi wala tayong 2019 beginning or 2018 ending. Okay, so let's do this. Sales divided by your average receivables. So this one there. So one decimal place na lang natin. No need to be 2 decimal place accurate here. All right. Okay, I lost a figure here. Sorry class kasi na ano ko to. Lagyan lang natin ng 15, no? Just put 15 here. Okay. So what do we have here? Ano ibig sabihin nitong ARTO, yung accounts receivable turnover? Okay, let's go back to our illustration. So now we have ARTO here. ARTO. Accounts receivable turnover. So again, this is number of times. Number of times what? A company from sales. How many times a year is it able to collect? Okay. From the sales to collection, how many times is a company able to do this? So for our microdrive, 9 times, no? 9 times. So let's draw that. 9 times yun. So from sales, no? Collect 1. From sales again, 2, 3, 4, 5, 6, or hindi nagasya, 7, 8, 9. 9 something times. No? So ito si microdrive, 9 times. On the other hand, yung direct competitor is 15 times. So same year, pero 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Sorry for the irregular drawing. So what does this tell us? Mas mabilis yung collection ni mas mabilis yung collection ni competitor. 15 times siya eh. Sales, collect. Sales, collect. 15 times. While our company was lagging behind. 9 times lang siya nakaka-collect every year. While the competitor was collecting at a rate of 15 times per year. So yung velocity niya ng collection, mas mabilis. So what can we learn from this? Maybe it would be good for the company to study. Ano kaya yung collection system ni direct competitor? Maganda ba yung nila, yung magagaling ba yung yung kanilang yung sabihin natin mga collectors nila? Okay? So what makes them collect yung mga dues ng mga customers nila very fast? Kasi 15 times sila. Okay? While tayo, 9 times lang. Bakit ganun yung speed nila? So that's a very important question. But as regards comparing our performance with the direct competitor, we say that we fail. We fall in comparison to the direct competitor. Talon-talo tayo. Naka 15 times na sila na collection sa isang taon, tayo nakaka 9 times lang. So baka tatamad yung collection department natin. Baka hindi sila magaling mag-collect. Baka kung ano-ano pang mga namamasyal muna, etc. Those things we can, kung ano man, kung baka naging unprofessional yung this could be reasons. Or baka hindi trained yung mga staff nila kung paano yung art of collecting. Kasi may art din yan, may manner din yan. Okay, so these things ought to be analyzed by the company. Okay, once again, class, pause muna ako. Clear so far yung R2 natin. So sa R2, sabi natin, the higher the better. Okay, this is a good question, Shakaina. Walang distinction sa cash at credit sales. Yes, that's true. So, yeah, issue yan, Issue yan. Bakit, Bakit, since receivables to, di ba dapat credit sales yan? Okay, so there have been studies about this and they have found out na hindi masyadong malaking difference. Okay, kasi, di ba, yung mga, credit sales lang titingnan natin. Hindi natin isasama yung cash sales. So what happens? Next year, ganun din, di ba? Parang may mga cash sales din naman next year at saka may credit sales din. Right? So it will just even out, no? So it will not be so much of a factor. But formula-wise, yeah, if you have the details to the credit sales, theoretically, mas tama siya. No? Pero for all intents and purposes, based on research din na ginagawa, na wala nang masyadong nakikitang difference between if isasama natin si credit sales lang for this year. So next year, ganun din, no? Matatanggal din yung cash sales dun. So credit sales lang din yung magiging numerator natin. But yeah, that's a very legitimate concern. And thank you for pointing that out. Very good question. Okay. So yeah, Shikaina, thank you for that question. That's a very valid and a very, very good question. But as I said, no, yung research shows that there's not much difference, no? Lalo na kung compare tayo year on year. Okay. All right. So thank you. Sige. So again, guys, okay ba yung natin, yung R2? Okay ba yung discussion natin? The higher, the better. Pag higher siya, ibig sabihin mas mabilis yung turnover ng receivables natin, yung pag-collect natin. So is that clear? Just like ITO, no? The higher the better. Ganon din si R2. Okay, any comments, guys? Kung yes, kung clear so far, would appreciate your feedback. Okay, good. Thank you so much. Salamat ha. And, all right, good. Okay, next. Up to naman. Up to. Ano yung up to? So as you know already, ang ano nito, ang denominator will be average payables to, no? Accounts payable. Okay. Right, average accounts payable. And then, what's the numerator? Kung sana may purchases, yung actual account na ano, then pwede nating gamitin yon. But in the absence of any information about the purchases, we're going to use the cost of goods sold. Okay? Cost of goods sold ang gagamitin natin. Kasi sa cost of goods sold, ando dun yung cost ng inventory. Of course, may mga kasamang ibang cost yan. So, which makes it a bit inaccurate kasi kasama dyan, for example, yung direct labor. Kasama yun sa cost of goods sold. Eh, hindi naman related yun dun sa trade payables natin. Okay? But if you're going to use it consistently throughout the years, okay lang yan. Nami-mitigate yung differences between years. All right, so this is equal to cost of goods sold divided by average ng payables natin. Accounts payable. Hindi kasama si notes, ha? Accounts payable. Trade payables. All right, we have 16. I-round off ko na lang. 1 decimal place. And then copy natin to. And then let's suppose this is 10 na lang. No? I'm going to message you kung ano yung actual figures na to. Kasi na-delete ko yung 2 rows. So I just want to make sure what this, I'm just giving an example. No? So these are just examples, just to compare. Just for comparison purposes. All right. Ano yung ibig sabihin ng up to? Okay, ano naman yung up to? So for up to, ulit natin dito. Up to is accounts payable. Oops, mali. Here, up to. So this is your accounts payable turnover. And we know that, okay, ang turnover, guys, okay, na ano natin formula, no? So it's the number of times, okay, from company buys on account, ibig sabihin utang to, company buys on account, and then bayad, payment. How many times a year? So si Drive Micro, how many times a year siya? 17 times. Okay? So sa isang taon, let's draw this 1 year, 17 times siya, nagbabayad ng payable siya. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, hanggang 17, no? 15, 16, 17. So 17 times. Okay. So roughly, guys, this is kung 17 times, ano yung less than 1 month, yung frequency ng pagbayad. Kasi ang less than 1 year pala. Kasi ang 1 year, ano di ba? 12 months. So more or less, parang 1.5 times a month nagbabayad, more or less. Parang ganun. While on the other hand, si competitor 10 times lang. Okay. So anong implication yan? 10 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, ibig sabihin, ano ibig sabihin nito? Less times na nagbabayad si competitor. Good or bad? Okay? Good. Bakit? Kasi ibig sabihin, mas longer yung duration ng pagbayad niya. Bumili siya ng raw material, kailan siya magbabayad? Dito. Dito sa intervals na to, average times na nagbabayad siya. Okay? Ibig sabihin, mas mahaba yung terms na binibigay sa kanya. Right? Ibig sabihin, siguro, mas maganda yung performance siya. Companies are willing to give him longer terms as compared to microdrive. Ito 17 times. Ito 10 times lang. So, winner to. Winner si direct competitor. So you see that opposite yung ITO, RTO kaysa sa APTO. Si ITO at saka si RTO pareho. The higher, the better. Si APTO, the lower, the better. Which brings us, so hindi natin aabutin yung inabot ng kabilang section, but at least umabot tayo dito sa DPO, no? Okay. So, itong guys, itong si inventory turnover, merong pinsan to. Ang pinsan niya, ito. Ito. Lagyan nga natin ng fill para... So, yung dalawang yan, magpinsan yan. It actually measures the same thing, pero iba yung computation nila. So, ang DIO, days. Lagay ko lang meaning nito for your reference. New comment. Okay. Huwag na comment, ano na lang. Note na lang. Okay. So, DIO is equal to days inventory outstanding. Then AIP is equal to average inventory period. Okay. Yan, no? So that's the meaning of DIO, days inventory outstanding, and AIP, average inventory period. So, kung yung inventory turnover, ang binibilang niya kung ilang number of times. Si DIO naman, ang binibilang niya ilang days. So this is number of operating days. Let's assume that the company is open 365 days a year. Ibig sabihin kahit may holiday, meron pa rin workforce sila, may manufacturing pa rin. So 365 divided by ITO. Okay, or this is 365 divided by quantity cost of goods sold over average inventory. Or this can also be kung tutuusin, this is equal to 365 times average inventory divided by cost of goods sold. Diba? Okay, nabaliktad yung formula. No? Okay, multiplied by 365. Okay, so let's do that. 365 divide na natin dito sa ITO. Tanggalin ko nga to. So, 94.5 days. Alright, tapos ito lagay ko na lang formula. 365, para hindi mawala yung format, divide by 6.1. Okay. Okay, almost time. Alright, ano ibig sabihin nito? Kung yung ITO, ang binibilang natin yung number of times, ito, number of days. So balikan natin to. So what does this mean? Ang ibig sabihin nitong 3.9 times, no? Okay, ibig sabihin nito, 94.5 days to. So it takes the company 94.5 days to buy raw materials, convert to finished product, and then sell. 94.5 days yan. So equivalent in 3.9 times sa 94.5 days. 94.5, 94.5. While on the other hand, si competitor, 59.8 lang. Sabihin natin 60. 60, 60, 60. So if you take a look at this, 60, tatlong 60, mga 180 na yan, no? 94, 94, mga practically 180 din. So nakakatatlong gawa na siya, nakakatatlong benta na. Dadalawa pa lang, hindi pa nga nakakatapos ang dalawa yung company natin. Right, so you can see the disparity. So ITO and ITO and okay, ACP or DIO, pareho lang yan, no? Pareho ng idea. And so if sa ITO, the higher, the better. Sa DIO, the lower, the better. The lower, the better. The lower days. Ibig sabihin, mas mabilis yung velocity. 60 days, tapos, nagawa na kagad. Another 60 days, benta na naman. Tapos at saka nabenta, another 60 days, nabenta na naman. Tayo, around 95 days. Okay? Tapos ganun din dito si DSO. Ang pinsan niya, si Arto. Guys, it's practically time. May I have just 2 minutes just to, okay lang ba? Permission to add 2 minutes? Matapos lang itong hanggang BPO. Pwede? Plus 2 minutes extension. Okay, thank you. I take it to mean that everyone's okay with it. Okay, so Arto, di ba, the higher the better. DSO, the lower the better. Pero pareho lang yung minimension niya, na? Magkaiba nga lang ng ano. So this is, okay, baguhin nyo lang to, no? 365 divided by Arto, or 365 times average AR divided by sales. Yan ang formula niya, no? Sige. Pwede nating, ano yun to, i-copy pababa. Copy natin pababa to. There. And then, to, copy natin pababa. Okay. What does this tell us? 39.2. Ano ibig sabihin nun? The average collection period is 39 days. Yun. It takes us 39 days to collect. The competitor collects in 24 days. So, sino mas magaling? Sino mas magiging liquid? Sino mas ano yung operations? Di ba ito? Kasi 24 days lang nakolekta na nila. Yung company natin 39 days. Although nag-improve tayo compared to 2020, but still benchmark to the industry, to the direct competitor, talo-talo. Tapos lastly ito, plus ito naman ang pinsa niya, ito din. So magkakapinsa niya, no? Alright. So ganun din, 365 divided by yung up to. So ano ibig sabihin nito? In 21 days pa lang, kailangan na natin magbayad. Diba? Yun ang up to, number of times na kailangan magbayad in a year. Ito, number of days bago tayo magbayad. Okay, so yung 17 times, ibig sabihin yan, in 21 days. Okay? So, in fact, nag-deteriorate. Hindi, nag-improve siya noong 2020. Pero, tinan nyo to. Hindi. Kasi, guys, ang DPO, di ba ang up to, the lower the better. So, pagdating sa DPO, the higher the better yan. Okay? So, yeah, nag-improve nga siya. 17 days, naging 21.5 days. Pero take a look at the benchmark. Yung competitor, 36 days sila bago sila magbayad. Ibig sabihin, they're given more terms. Mas nagagamit pa nila ng cash for other purposes bago sila magbayad. For whatever reason, baka maganda yung performance sila, baka valued customer sila, baka malaki yung ino-order nila. So the company has to look into that. Kasi tayo, 21.5 days, kailangan natin magbayad. Okay? So next meeting, class, we'll try to finish this. Kung hindi, this will spill over to Tuesday, to Monday next week, and then Thursday next week will be our exams, no? Face-to-face exams. All right, and it will cover everything about financial ratio analysis, financial statements, etc. Okay, so thank you so much, class. Let me stop recording now.